Hi traders, welcome to the Markets in 3 with me, John, Senior Market Analyst here at Anzo Capital. I'm going to be taking you through the latest data in FX markets, what the big movers are, and some charts to watch today. So let's get into it. We obviously have a huge day in markets. We have the inflation data coming up out of the US, which is expected to see some really interesting releases coming from that. We're expected to see some big changes to the core inflation rate and the inflation rate year on year. And we're going to explain a little bit about what's been happening there. We're also going to take a look at some key charts of interest, and we're also going to look at where are the big hedge funds positioned in the markets. Are there any extremes that we can have a little look at when we're facing some of these big moves in FX markets? We've seen a few extremes lately. We talked about the one on the pound, which worked out really nicely. We also talked about one on the New Zealand dollar, which also worked out very, very well. So let's go take a look at what we're facing today. And what we're facing today is this CPI data. Now, we covered a little bit of this yesterday, obviously, but the markets have just been stalling. We've been pretty sideways since. I actually took a trade on euro dollar yesterday, and I basically traded this distribution here on the market profile. So if I just bring a pen tool in just to show you what I traded, I was looking at the idea that the market would potentially stay within this profile that was being built, right? So what we usually see before large trading events, large news events, is the market can be very range bound, right? So on euro US dollar here, I was looking to see if the market would stay within this band here, which is those value areas created by the market profile. So I ended up taking a short position after the market rejected the high here and targeted the low of the range. And I had to wait a little while for this one to actually come through, because in the end, the market ended up kind of consolidating for a long period of time. And just, instead of going straight down towards and rejecting the side of the market and falling straight down, it ended up kind of going back and forth a little bit. So we're starting to see that range day, but this was important because what we've actually seen is since NFP on Friday, euro dollar has just been trading to the downside, right? So I want to be on the short side of euro US dollar until kind of like the CPI news today. But we might get a similar thing. We might see the market starting to kind of range bound move ahead of the news. And then once the news releases, either way, we'll see a breakout to the upside or a breakout to the downside. Now, what's quite interesting, if we look at Friday's NFP day, look at this large volume area that was built down here. This area could act as a very, very strong level of support going forward. So I'm keeping an eye on this zone down here. So if I just draw this out for you through there, let me change the color of that rectangle just through here. And if we look at the point of control is trading around about one spot 15.22, right? So one spot 15.22. So this zone here could be one of interest going forward. If the price continues to drop to the downside and the market pushes into this level here, we could expect a potential rebound to the upside, okay? And we can do this for other asset classes as well, right? We can go take a look at gold. So gold yesterday was an interesting one. I looked for a short idea on gold yesterday. The market came down, hit 2-to-1 targets after a break and retest of this move here. But let's go take a look at the 4-hour chart, because gold prices have been very bullish. Market has been trading significantly to the upside, and we're seeing quite a move towards the 44.50 handle. Sorry, guys, suffering from a bit of a cold here, so my talking might be fairly limited today. But essentially, what we're seeing is the market is driving higher. We're driving towards the key areas of resistance, the 44.50 handle, the 44.75, and possibly even to the 4,500 level. And the reason why we're seeing this big move to the upside here for gold is because the market is trying to price in the idea that we're going to get less and less interest rate cuts, interest rate hikes by the central bank. There are 2 hikes potentially priced in by the Federal Reserve, but as inflation has come down, as NFP is showing weakness, as the GDP is coming in a lot lower, US dollar is suffering. The US dollar is getting a lot weaker. But look at gold. Even though the dollar has performed pretty well this week so far, if we go take a look at the US dollar index, it's kind of stayed, around that kind of support area down at the 99.50, kind of even been a little bit more on the bullish side, right? The market has the gold market has continued to rally, right? So it just shows you how aggressive buyers are in this area. Now, one thing I like to look at when it comes to gold is yields, right? Yields are falling. They are coming to the downside. Now, if we get a CPI release today, then we could expect a potential for the market to break lower, right? So if we get a CPI release that is very good in terms of it's coming in a lot lower towards that target range of 2 to 3%, then US bond yields could trade lower. That would be very positive for the likes of gold. Very positive for the likes of euro dollar, right? So we could expect gold prices to head up to 44.50, 44.75. However, if we look at it from a daily chart point of view, trying to get on the back of this move is very, very difficult right now. If you're a swing trader looking for an opportunity, then you need to wait for price to come a lot lower. And that might be a catalyst from inflation. If we see inflation coming hotter than forecasts, that could then see bond traders trying to price in the idea that we are going to see a rate cut and that yields will rise, gold will fall, and the market could come down towards 41.90. So a couple of scenarios there to look at going into the days, especially when it comes to gold and when it comes to euro dollar, right? So if we go back to the 30-minute time frame of gold here, we can have a little look at some kind of trading ideas. So yesterday, we saw the market was trading outside of value for most of the day, outside of the previous day's value, right? So if I just move this over to previous day, we can see that there was a nice sort of consolidation coming down towards this area here. So it was kind of like one of those days where the market had just been range bound, broke out in the US session and rallied. So what I was looking for yesterday was, would price come back and try and test value, right? We had a nice drop in the London session. Market rallied. We had a little consolidation towards a low volume area. If I just draw another market profile in here. All right. We had a spike in large volume here. Market came up to that area and we just saw a continuous failure by buyers to get through to this level. So broke higher. What did I expect? I expected the market to come a lot lower, potentially into point of control of the day, which it did, which was that nice trade. Now, looking at the distribution today, we can see that the profile's higher. So usually that tells us that the market is bullish. We can see that in the trend. We can see that with the 50 moving average, the 200 moving average, 50 is above it. The gap between the 50 and the 200, very wide, showing very good bullish momentum here. What would I look at today? Well, there's a couple of different options. The first one, we have this untested point of control. So I like using point of controls to trade from. I think they're good areas to look for support and resistance. And if we look down here, around about 43.35, there is an untested point of control. If price comes down into this level, then we could expect a potential rebound and the market move higher. Another level is to look at yesterday's point of control, right? Yesterday's point of control That's sitting around about 43.72. So that level could also be a good area for price to find support. But I expect the market to be pretty range bound heading into to the CPI data this afternoon, because it is a big event. These moves that we are seeing at the moment are exaggerated because Fed Chair Walsh has been open to not showcasing forward guidance. So we have to rely on looking at the data, looking at the data drop, looking at how the market then goes and prices that. And we've got two back-to-back datas. We've got the CPI inflation, PPI data as well, which is also inflation data, but a bit more forward-looking. Okay, so expected to see maybe a little bit of volatility going into this afternoon. Now, if we look at across the other markets, if we look across other US dollar pairs, so we talked a little bit about euro dollar and how that market's doing. Pound US dollar has been pretty bullish too. We've seen this breakout. So this was where we had the commitment of traders signal to go long. We had the inverse head and shoulders pattern and the market broke out. We then had quite a decent pullback in the market where I actually thought maybe we weren't going to see another bullish leg, but we did. The market broke out of its 4-hour trend and actually came all the way down to retest the neckline of the inverse head and shoulders pattern. Consolidated, broke out, and has now continued to push higher too. So pound is showing some decent strength against the US dollar. If we look at the Aussie US dollar as well, also seeing that kind of upward trend, higher highs, higher lows. The only real underperformer at the moment is the New Zealand dollar. That's seeing a little bit more weakness, although we did obviously break out to the upside as well. So the dollar is in very much bearish territory. But another market I think we can really watch going into today is dollar yen. Dollar yen is obviously we saw the intervention move come in, which was also backed by the US. And we saw prices move from the 163 handle all the way down to the 155s. Now we've had this very, very slow pullback, right? Market is just grinding its way, higher highs, higher lows, and is now trading back at the point of control of this downward move, right? So trading around about that 159.45. So if price finds resistance here and we see a weaker inflation, then dollar yen could be trading back down towards 157, perhaps back towards 155. This is a market I particularly don't want to be long on right now. We obviously saw intervention. We talked about getting short on the intervention. That worked out really nicely. We talked about the second sort of, breakdown. That also worked out very well. And now the market's kind of making a very sort of slow move back up. So it needs a catalyst. It needs something to be able to drive prices lower, and that could be the CPI going into today, right? So if we see a hotter print though, again, this market could be interesting because we see a hotter print and dollar yen trades up to 160, 161, 75, then are we going to see intervention again? Are we going to see another move where the yen is getting a little bit weaker and we see a strong move to the downside? So again, dollar yen is quite an interesting play at the moment because it's got lots of different factors going for it where we could see some changes. So let's move on to the other part of the day then. So that's kind of the charts that I wanted to take a look at, all US dollar based going into the CPI data today. Obviously, like I said, dollar yen could be an interesting pair, gold as well as euro dollar, and some key areas to watch. But if we take a look at the big story for today, what we were talking about was hedge fund positioning. Where are hedge funds positioned going into today, right? So I've got the hedge funds positioning here. I'm using barchart.com today. And I'm going to go over to currencies. I'm going to have a little look at the currencies first, and then we're going to go and look at the other markets as well. So when I'm looking at commitment of traders reports, I'm looking for extremes. So What do I mean by that? I mean when positioning has become so skewed to one side that we see a bigger react. We could see it like a big unwinding, a big reaction. One we talked about lately was Canadian dollar, right? So if you see here, we can see that. Look at this 52-week range here. You can see that the bar is completely red. That basically just means that large speculators are at the, are or their short contracts, their net short contracts are at their highest levels in a 52-week range, right? And to show you that, if I open up the Canadian dollar chart here with the commitment of traders report on it, you'll see a couple of things, right? So let me just go into here and just put large speculators. And then let me change this chart to a chart you're going to be more familiar with, which is just a candlestick chart, right? So what we've got here is a weekly chart, okay? And this is Canadian dollar futures, but for us, that's US dollar CAD, right? And we can see that the short contracts from the Canadian dollar are at a really significant low. If I grab a line tool here, horizontal line tool, and we place where we're currently at, we can see that we haven't seen this type of extreme positioning since January 2025 and even November 2024, right? If we look at previous to that, we've got July 2024, okay? Now, what I like to look at is how did the market react when we got to these areas in the past? So if I just grab a vertical line, we can pop on when we were at extremes in the past, right? And see how successful those extremes have been in calling a potential turning point in price. Now, if something's at an extreme on the short side, right, that means that we're looking for price to reverse and move higher. Okay. So when we take a look at what happened on the 8th of May, 2024, oh, sorry, that will be the 5th of August, sorry, 2024. The Canadian dollar was in a range pretty much on the weekly chart, but then it had an extreme. It broke out, and the extreme short positionings from hedge funds had reached an extreme we hadn't seen for a very long time. Look what happened to price. CAD futures then rallied, right? So on that chart, that's dollar CAD downside, okay? It only rallied for 1, 2, 3, 4, 5, 6 weeks before turning and the market sold off again, okay? Because obviously there's a bigger picture move going on. But after that sell-off where we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, nearly 14 weeks of downside for the Canadian dollar, we reached extremes again, right? So we actually reached two extremes. We reached one on the 25th of November, which was a failed extreme because price didn't reverse. Then we had one on the 20th of January, 2025, which caused a big reversal, okay? Big, strong reversal in the dollar CAD prices, okay? And we were across all of these. Then we saw another kind of extreme, which was in November of 2025. Bit of a minor one, though. It wasn't as aggressive, but we still saw upside from there. Now we have the same thing again. And this is why I've been trying to get on a short for US dollar CAD for a little bit. It's just my levels weren't getting tested, unfortunately. But this has been a potential for the market to move higher because we've got this extreme short positioning. And the fact is, they're still adding to those positions. When we look at the report here, I'm just going to turn it to a detailed report. We can see what they've been doing, right? So the last report that came out was on the 4th of August, and it showed minus 179,000 contracts. The week before that was 176,000 contracts. The week before that, 174,000 contracts. So they're still adding to these short positions, even though we're starting to see that kind of turnaround in that dollar CAD price. Let's look at some more extremes. So another extreme that we can see here is euro. And again, this is why we were looking at the bottom coming into euro as well. I expected a bit more downside in euro, to be honest, but it didn't happen in the end. Let me go back. That's not what I want. Go back to. Can I go back? On the chart. There we go. So I mean, look at the commitment of trader reports here. Right. Again, I'm just going to take off commercials, and I mean, we can leave the commercials on, but it doesn't really matter. Large speculators, we're going to grab our horizontal line and see where those extremes came in and what happened to price. Okay, that's what I always like to do. I like to just see if we've had these extremes in the past and what happened to price. Now I have to zoom out a little bit to get the extremes of where we've been, because we haven't seen an extreme like this for a while. So the last time we saw it was back towards 2019, 2020. So kind of like around these areas here. Which led to a bit of a deeper correction. Then back most recently in the end of 2024, start of 2025. Okay. And look what happened to price. So the one in 2021, 2025, 2024, 2025, the market was down. It broke out of a range, right? It rejected that range, came in a little bit lower, but then we started to see extremes form on the hedge funds, where there was extreme short. We obviously had some data then which flipped that, and euro dollar rallied from the 1.0 sort of 40 handle all the way up into the 1.2s, right? And then the market consolidated and has now recently sort of kind of like traded lower, but we have another extreme, right? Now I was expecting price to come at least back down to sort of the 1.1 sort of 05 handle, or 1.100 handle. I was looking for the retest of these highs basically before looking for the long, but it hasn't happened yet. The market has pushed higher, and that's because obviously the market is pricing in less chances of rate hikes by the Federal Reserve. So if we see that narrative remain and price is now back above this support, maybe we can see a move back up towards the 1.2 handle for euro dollar, because we have this extreme forming. If we look at the 2019, 2020 case, that's a bit of an outlier, because obviously that was COVID. So, there is a lot of fluctuation going on around that period of time, but it did eventually, turn, and we saw aggressive sort of euro US dollar upside for a good period of time. Let's see if there's any other ones where we've seen it. So some short extreme positioning down towards 2015, where we saw a slight rebound, but market remained pretty range bound at that point. So that's the thing. I'm not looking for any kind of massive moves here. I'm just looking for a retest continuation up towards that 1.2 handle potentially for euro dollar because of this extreme. Are there any other extremes that we can see? So when I look for extremes, I'm looking for at least sort of it weighted 70% to sort of 30%, but doesn't look like there's any more. So the two big extremes at the moment are euro and the Canadian dollar, right? So euro and Canadian dollar both on the long side, okay? And we can see that they're still selling other markets. So other markets we can see that they are selling things like the New Zealand dollar, right? Short positions changed. There we can see that the Australian dollar as well. But this gives us a good insight, because if we want to try and like trade a particular market, so let's say, for instance, we know that the RBA could potentially start not necessarily cutting interest rates, but holding interest rates where they are, because they feel policy is restrictive enough, right? Yet you've got a potential euro where we see in an extreme positioning form. So we could potentially look at Euro Aussie as an opportunity to trade, because we have one side of the fence, which is a central bank, central bank not looking to do much, where you've got an extreme positioning on one side. So when I look at the Euro-Oz chart, it does make sense because this chart has just been going down for a good while. Right, look at this daily chart. The market has been priced down. Now, we were looking for some short ideas on this recently because the strength of the euro has not been that good. So this was what we kind of marked up here. But when we look at that extreme case, where is that extremes potentially found? So this is why I like that one spot 6050 handle. And what we could see is if we did get a push down towards here, that could trigger, a potential, if we do get the trigger then of the commitment and trader report signal, then that could be our area where we look for a big reversal in price. But at the moment, this is looking pretty bearish. We've got lower highs. We've got a bit of a base forming here with the sort of that. So that's like a descending triangle, and the market does tend to like to break out of those patterns. So we could see some potential there. Okay, so just to kind of wrap up them, we've talked about positioning ahead of the CPI data this afternoon. We've got Euro. We were talking about the key levels to watch there. We also took a look at gold prices as well as other markets such as US dollar yen to keep your eye on. We also took a look at the commitment and trader reports, and we highlighted the key extremes that we're seeing at the moment. So the Canadian dollar, for instance, and the euro have key extremes on. So we're looking for reversals in those particular markets. So thanks for joining me today. Hope you enjoyed it. If you did and you learned something new, hit that thumbs up button, subscribe if you are new, and I'll catch you in another one. But if you are looking for something to do tonight, I do have a webinar tonight talking about how to trade multiple time frame analysis. If you want to know more about that, drop a comment down below and I'll get that link over to you. So thanks for watching. Speak to you soon.